Let me switch focus though. Vikram Sahu, who's the India CEO at Bank of America, joining at BofA Securities, joining us. He's live in conversation with Sujit Mangat. Let me toss it there.
Hello and welcome to ET. Now we are at the Bank of America's 2026 India Conference, and with me is Vikram Sahu, who is the India CEO and Country Executive for Bank of America. Vikram, thank you for joining us on ET. Now, to begin with, it's a conference where we have more than 400 foreign investors in India. What are they telling you about India?
So, good morning, Sajid. Thank you for having me on the program. So, it's an interesting question. And if you think of what the actions of FIIs have been over the last year, as giving you one message, where we've seen FIIs sell down India and exit from India. And so when you look at FII ownership in India right now, we're at about a 14-year low. So coming into this period and planning for the conference, I wasn't sure in my mind about what the turnout was going to be. And what we found instead is that there's been a 30% increase in FII participation in the conference this year relative to last year. So maybe that's telling us that what FIIs are doing is to say that they voted with their feet over the last many months because valuations were stretched, because they had concerns in their mind about factors like AI and what would mean for India. But they're still prepared to roll up their sleeves, sharpen their pencils, talk to companies, talk to policymakers, and try to establish whether this is a point in time at which they should take another look at India and look at Indian companies. Because as always, there's a right price for everything.
Interesting, because if you look at some of the numbers which you spoke about as well, this year alone, we have FIs have sold nearly 2.25 lakh crores. Over the last 17 months, around 3.5 lakh crores, which have gone out of the country. And still, we are at the same kind of valuation despite that, because we have been supported by a good DI flows, which is supporting the market. In the absence of a sizable correction or value correction which is coming in, do you think that FIs are now waiting for a time correction before they come in?
That's partly it. By the way, before we go there, what I do want to say is thank goodness for domestic inflows. And that's an entirely healthy thing when it comes to Indian capital markets, because you're not as dependent on foreign investments in India as you were perhaps in the past, at least for equity markets. Now, coming to a question about what are people waiting for? In part, there has been a value correction over the last year. And when you look at it in rupee terms, then certainly there has been a more pronounced correction than just the indices would suggest. In part, it's a time correction, because one of the other issues that investors were concerned about was earnings downgrades for India over the last year. And our best sense is that while we may not be quite at the end of that entire cycle of downgrades, we're getting pretty close to it. And so intrinsically, that would make this, at this entry point and at this point in terms of what earnings expectations are, a little bit better than it would have been 12 or 18 months ago. But I don't think we're out of the woods yet, because all of the issues that are on investors' minds have not been resolved. And I'll just cite two of them. The first one is the turmoil in West Asia. That was nothing to do, it was not of India's making. But because of our dependence on energy imports, we find ourselves caught up in it. And the big unknown is what is the duration of this turmoil going to be? If it is something that is quickly resolved, then that's another sort of overhang on India that investors are going to be able to get past. But if, on the other hand, if this extends for a prolonged period in time, then we may not be at the bottom yet, because there will be consequences for Indian earnings, for the Indian economy, and so on and so forth, which has an implication for financial markets. So that's one big variable. The other variable, of course, is AI, and what that means for India, particularly given just how India's benefited from IT services over the last quarter of a century. And then the question mark is, well, what does this mean for India going forward?
Interesting. You spoke about earnings. Last 2 years, we've been sub 10% in growth, earnings growth. The Q4 numbers were very good. I mean, we had more than 10% of growth coming in. But then you have this West Asia crisis, which is coming in, which is again putting some downgrades on the earnings there. Do you think the foreign investors are now going to not just look at the index, but also the value play here, the growth stories which are there? Nearly 400 of foreign investors are here in your conference. Are they looking for ideas? Are they looking for what's the next value play which is available, not just from a country evaluation, but from growth, individual bottoms-up approach?
So, I think that's always been the case, because the institutional investors that tend to attend our conferences, both domestic as well as foreign, are very fundamentally oriented. Yes, macro is important, and they do think about whether macro provides a headwind or a tailwind, but they have always been people who are prepared to actually sit down and really drill down into individual companies, look at the bottom-up fundamentals, and try to decide whether the bottom-up fundamentals justify investment. So that I don't think is actually changing with the cohort that is here at this conference.
You spoke about the fact that two factors are there, geopolitical and AI, which is now determining how FIs are going to play. What about the macro factors? Do you think they have a comfort level when it comes to macro stability, growth? We have a current account deficit, which is there, which is again putting pressure on the rupee as well. Is that a concern at all?
Yeah. So the rupee has been something that comes up in lots of conversations. And by the way, not just conversations with institutional investors, but with corporates as well. Because the depreciation of the rupee in the last year has been more pronounced than you have had in prior years. So it's certainly clearly something that's on investors' minds. Having said that, I think the Indian government has a lot of credibility with observers of India. And the reason for that is twofold. One is because the consistency of investments that the Indian government has made in the decade prior to this. And second is the responsiveness and the speed with which the administration has reacted to some of the challenges that India has faced over the last year, whether it was the lack of a trade deal with the US, or whether it was West Asia, or whether this overhang of AI. And what we've seen in the last 6 or 8 months is a slew of trade deals, more trade deals announced than in the prior many years before that, including, by the way, a framework deal with the US, which was announced in February. And then in addition to that, a whole slew of reforms that have also been pushed through. So I think the Indian government's posture has been, yes, this is a turbulent time, but you don't let those turbulent times go to waste. And what you try to do is you try to respond to them and react to them. And so for that reason, while there may be some consternation about the depreciation of the rupee, I still think that the credibility of policymakers in India is quite high with the investors that we're talking to and with the corporates that we're talking to.
Now, you just completed 1 year in BofA India. And you've seen two major events happening, which one is your trade and the other one is West Asia. From a policies point of view, how do you think India has managed both of them?
Yeah. So actually, let me just say one thing. So I've completed my first year at Bank of America in India, but the bank itself has been over here for more than 60 years and has got very, very deep roots within this market. So this is not a market that is not familiar to the bank, or which the bank does not have, high conviction in. So if your question was to say, what does the turbulence of the last year mean for the firm's commitment to India and its plans and its aspirations for India, it hasn't changed at all. We like India because of the size and scale of the economy, because of the velocity of growth, and also because of the governance and the regulatory frameworks that we operate in within India. So we're very, very committed to the country for that reason, and we have strong aspirations for our presence here in India. When it comes to institutional investors and corporates, I would actually say that when you look at the responses from other governments around the world, I actually think that the Indian government is acquitting itself extremely well with the speed and the proactiveness with which it's trying to address the situation that it finds itself in.
And
So-
because you manage multiple businesses in India, not just securities, but also corporate banking and M&A financing, others, which is a big business for you. How do you think Indian corporates are looking at this opportunity, these challenges? Are they leveraging this for their advantage to go global in that sense?
So there's two sides of the coin. I'll talk about Indian corporates and I'll talk about foreign corporates and how they look at India. With Indian corporates, these are real companies with real costs of capital, professional managers that are determined to deliver for their shareholders and maximize their returns. And I think that Indian corporates are actually, again, very adept at responding to the circumstances that they find themselves in, and extremely professionally managed. So I have no concerns on that front in terms of the activity levels that we're seeing with the corporates that we're engaging with on our corporate banking businesses. When it comes to foreign corporates, I guess the subtext of the question is to say, will foreign corporates change the way they think about India because of this turbulence? And the answer is no, absolutely not. We see undiminished interest in India. And that's because if you look at the intrinsic reasons that they're focused on India, that has not changed. And again, it comes back to the points I was making earlier, which is size and scale of the Indian market. So even in these difficult times, you're going to have GDP growth of about 6.5% this year. Contextualize that against global GDP growth of 3%, we're growing at more than twice that rate. And that's not shabby for an economy that's in the fifth largest economy in the world. The second is so size and scale, velocity of growth, and like I said, regulatory and governance frameworks that are very robust over here in India. So no diminution of interest over there.
My final question to you is on the AI part of it. You said that's one of the challenges that India is facing. How do you think Indian companies are managing that challenge? And from a securities point of view or the markets point of view, how do you think is the sell-off overdone for India as an anti-AI trade?
Okay, so I don't think that the market is being irrational in trying to think about what AI means for economies in general, and then for India in particular, given that we're sitting and talking about India. In India, it's a particularly pronounced question because if you look at IT services, it's been an engine of growth over the last quarter of a century. Per capita income in India is roughly about $3,000, but it would be half that if you took out IT services. So it really is a big question mark. Now, coming to your question about how corporates are responding to it, and I think it's being done in a measured way. I think we're at the very early innings of enterprises understanding how to deploy AI, deploy it at scale, and in the first instance, deploy it for productivity gains. I think that's the first innings of what we'll see. The second innings is to say, well, okay, how can we also use it to maximize revenues? Because when you get those two together, that's when AI delivers on its full potential. And I think that is, again, something that we have to yet see play out. But it's an entirely natural process of discovery because, like I said, we're in the very, very early innings of AI. Just remember, ChatGPT burst onto popular consciousness about 2 years ago.
True.
So it's early days yet.
Vikram, it was a pleasure talking to you today. Thank you very much for joining us on ET Now.
Thank you for your time.
Thank you.